All right, well, here we are. It is Thursday, August 22nd, and we're going to talk about interest rates today and what is moving the market. And we have seen a lot of volatility in the market, y'all. So let's dive right in and take a look at what has changed in the last 7 days. The Bureau of Labor Statistics, y'all, on the first Friday of every month releases jobs numbers. They release both the unemployment rate as well as jobs for that prior month. And y'all, we have numerous times on this call pointed out that we have seen massive revisions to that number 3, 4, 6 weeks after the initial report is dropped. So we get a very favorable jobs number, and then we get a really unfavorable revision down the road, so much so that even the Fed members have openly questioned what the BLS is doing to generate this number. Well, the Bureau of Labor Statistics came out day before yesterday and said that they overstated job growth by 818,000 jobs. Y'all, that means that they overstated 1 in 3 jobs for the year ending March of this year. That's a dramatic statement, y'all. Here's the thing. The unemployment report, when it comes out on the first Friday of every month, is a big news story. This won't be. This will make 1 or 2 news cycles. And then we're going to go back to them probably using the same flawed methodology to calculating this number as we go forward, keeping in mind this is an election year. So why would all of a sudden the BLS tell the truth about this 818,000 jobs? Well, I think they want the Fed to move, and I think they want the Fed to move aggressively when they meet on the 18th, as they view that as more helpful than they view this confession as negative. So that's where I think, y'all, if you're asking my opinion, that's why we got the number that we got. So we're looking towards the Fed meeting on the 18th. The only question is, y'all, how much will the Fed move? The Fed is going to lower rates at that meeting. Will they lower them 1/4 of a point? Will they lower them 1/2 a point is the only calculus that goes into that meeting. Y'all, if you had looked at the markets 30 days ago, I reference a tool called the CME Fed Watch tool. You can go to cmefedwatch.com and look this up. 30 days ago, there was a 3.7% chance of the Fed going 1/2. There was a 97% chance of the Fed going 1/4. Today, there's a 75% chance of the Fed going 1/4 and a 25% chance of the Fed going 1/2. We've actually seen that fluctuate quite a bit over the last 30 days, but we fully have in the bond market today a 1/4% or 25% of bond traders out there anticipating a 50 basis point cut by the Fed. So what's the Fed going to do, y'all? Well, the bottom line is if the Fed moves 1/4, we're going to see interest rates, frankly, higher on that day because there'll be disappointment that they didn't go 1/2. And if they go a full 1/2, we're going to see rates drop and maybe drop fairly considerably for the next few days after that move because you've only got 25% of the market expecting that. So that's where we are headed with the Fed meeting in September. So what has the Fed done? The last 6 times the Fed has met to start a rate cutting cycle, they moved 50 basis points. 5 of the 6 times, rather. Of the 6 times that they've met to lower rates and to start a rate cutting cycle, 5 of those were 50 basis point cuts. So I think it's likely, y'all, with the Fed looking towards the election, and with this news from the BLS, this confession from the Bureau of Labor Statistics over how much they have overstated employment, I think that the Fed has the ammunition they need to make a 50 basis point cut, not the shock to the market that it would have otherwise been. Personally, I think it's more likely than not that that's what the Fed's going to do. I did not believe that 30 days ago. I do today. When you look at what the Fed has upcoming, here's frankly how I would play into the upcoming Fed meeting, whether I would lock or whether I would float going into that meeting. We have personal consumption expenditures, the PCE report, coming out on the 30th of this month. That is the most important gauge of inflation from the Fed's perspective. If that report comes in better than expected, meaning inflation is lower than anticipated in that report, then I would absolutely float going into the Fed meeting, or at least float a week going into the jobs report coming up the following week on 9/6. If that report shows that we met expectations or inflation is a little bit hotter than expected, I would absolutely lock ahead of the Fed meeting. So Bureau of Labor Statistics comes out with a new jobs number on the 6th of September. Again, same approach to that. If it comes in much stronger than expected, then maybe you don't float going into the Fed meeting. If it comes in weaker than expected, meaning far fewer jobs than anticipated, then maybe you float going into the Fed meeting. And then you've got Consumer Price Index on September 11th. This is a big report for the public. It's a big report for the press. It's not as big a deal compared to PCE for the Fed. But again, the same is going to be true, y'all. If it shows inflationary pressure, lock. If it shows inflation moderating, float going into the Fed meeting. So that's kind of the approach I'm taking with this Fed meeting upcoming, y'all, only because we've got such a big disparity between, is it going to be 50? Is it going to be a quarter? Where are rates today? A little bit higher than they were yesterday, y'all. National average, according to Mortgage News Daily, has us at 6.48% today. We were at 6.58% a week ago, so not quite an eighth of a point higher. And a month ago, y'all, we were nearly a half point higher at 6.89. So we've seen interest rates improve nicely over the last couple of weeks. Hopefully that trend will continue. Hopefully we will get some good news in the PCE and in the BLS jobs report, and then again in CPI leading into this Fed cut to make that 50 basis point cut more of a reality. So in any event, that's the heads up on where the market is today and why it's doing what it's doing. Everything changes as data comes in, y'all. So I will absolutely update this next week. Stay blessed, stay safe. We will talk to you next week.